With just a few days to go for Budget 2025, will Finance Minister Nirmala Sitharam bite the bullet for the middle class? That's the question we are asking over the next few days and on Budget Day, 1st of February, which is just around the corner. There are a few pointed questions that we would like to ask and discuss on the show today. Number one, income tax. Are there going to be likely changes in the income tax slabs? Is there a possibility that there's going to be just one tax regime, no new tax regime or old tax regime, but just one income tax regime? That's the first question we want to address today. Going forward, how are the mutual funds likely to be impacted? Will there be changes in long-term or short-term capital gains? What about real estate investments? Will indexation benefits stay? That is another question that we would be asking today. And security transaction tax, will they have an impact on the markets? What about cryptocurrencies? Will budget stay silent on this new asset class again? And going forward, we will discuss what is in it for senior citizen savings schemes. Well, joining me to discuss this and more today with me is Mohit Gang, co-founder and CEO of Moneyfront. Mohit, good morning. Thank you so much for joining us here on News9 Live this morning. Let's begin first with expectations on the income tax front. There are clarion calls coming from all quarters, the middle class as well as corporate India, that we need to boost our consumption story. And for the consumption story, we need more income, disposable income in the hands of consumers. Is Finance Minister Nirmala Sitharam really intending to give those additional disposable income in the hand of citizens?
Hi, Kartik. Good morning. It's always a pleasure to be speaking with you. Look, I think we are just 10 days away from the D-Day in terms of honestly, I think only the day will tell what is lying behind the Red Book. But my sense is it's high time that these calls are heard by the Finance Ministry and by the government. I think the middle class in India, by all accounts, is shrinking. The rich are getting the richer, and the poor are getting poorer. The income disparity is increasing. There has to be more disposable savings allowed in the hands of middle class to be able to spend more, to be able to consume more. And I think the figures all across are showing that the consumption in India is suffering, and we need to do something to revive that overall animal spirit in the economy. So I'd not be surprised, honestly, if the government were to increase the threshold limits of taxes under the new tax regime. Honestly, Karthik, I don't think so that there'll be any tinkering around in the old tax regime, but the new tax regime will be made and should ideally be made more attractive, so that more and more salaried individuals or corporates even try and move towards the new tax regime. I think there's a gradual nudge by the government also. And under the DTC, government would want to have a very uniform and a simplified tax structure. So directionally also, I think new tax regime makes more sense. So I don't see any magic pills coming through in the old regime, but in the new regime, I definitely foresee and I expect that the basic threshold limits should be increased, and some benefit should also be additionally provided to the senior citizen class.
Okay, let's just discuss the income tax slabs for just a bit, Mohit. Is there a possibility that with a threshold increase in the new tax regime, the number of net zero or nil tax filers is actually going to increase, and hence is there going to be a problem for the government to collect those taxes? And while the consumption story at one level may pick up, government's own capex could take a beating with the slowdown in tax collection.
Look, honestly, I think the number of people any which was paying taxes in India is extremely low, right? I think it's sub 3% if I'm not wrong. And number of people filing nil taxes, at least you will get a larger base in the under the tax net by increasing the basic threshold limits, limiting increasing from 3 lakhs to 5 lakhs, 5 lakhs the base limit. I don't think so that should harm government too much in terms of the finances which it is collecting through direct taxes. In any which ways, I think the pie of indirect taxes is getting larger and should ideally become larger and larger as we move by. And People getting under more tax net, I think that's more to do with the uncovering of hidden incomes, trying to get more people under the tax net, improving the GST net, improving the improving the overall ease of business and everything around it, right? So my sense is that will happen gradually. I don't think so the slabs have got anything to do with it per se. You might just find a little bit more of zero tax filers, but that's okay to take as long as it creates more consumption and as long as it
Right.
creates ease of living for
All
so many
right.
people around.
And you're saying that no tinkering in the old tax regime. So old tax regime will stay. We will not have one unified tax regime, but the old tax regime will stay. Okay, no problem, Mohit. Let's move on to another very important aspect of personal finance. And this comes by way of the record number of SIP folios that we are seeing and mutual fund folios that we are seeing. Is there going to be any change in the mutual fund slabs when it comes to long-term capital gains or short-term capital gains, especially when there is this debate about bringing debt and equity mutual funds at par? How do you think that is going to pan out in budget 2025?
Oh, Karthik, I honestly wish and pray that they just forget about the mutual fund and leave it aside.
Okay.
I think they've done enough and more changes on the LTCG and STCG last year,
You're
and
saying changes. Do you mean they've done enough and more damage, or changes is the right word you want to use?
whatever the way you want to take it. But I think, look, debt is now fully taxable, so that any which ways is a no case. Equities, they've increased the STCG, LTCG last year, so I don't think so they're going to dabble with it every year.
Okay.
Enough and more amount of disturbances were caused last year. But yes, they have gotten a lot of uniformity both towards listed and unlisted asset classes last year. Even on the property, on gold, everything. There
Yeah.
was a lot of clarity being bring about, and now you see, if you see, there is so much uniformity across all asset classes. I don't think so. The government needs to dabble more. Any which ways. Look, finally, long-term capital gains, one has to also understand there has to be enough long-term capital gains for people to be able to pay those taxes. You
Absolutely.
can keep increasing rate, but if markets are not supporting you,
Yeah.
then there are hardly any gains to be paid out taxes on, right?
Absolutely.
So
So what does the
government will
government
also have
gain
to
at
be,
the end of the day? Very
yeah.
true. So let's move on to the next investment class. Let's talk about real estate. You just touched upon it, Mohit. But last year, again, we saw a lot of rancor around real estate investments and one rate to apply with indexation benefit, one rate to apply without indexation benefit. And then the removal of indexation benefit was brought back. Is that going to be status quo? Is that going to stay as is? Or do you think there's going to be some tinkering with indexation again this time around?
Oh, totally. I don't think so. Government could foresee what happened last year, and there was so much of hue and cry about the indexation benefit being taken away. And I think government did the right thing by clarifying that okay, all there was a grandfathering which was given, which is whatever you brought previously, you could decide whether you want to take indexation benefit or you want to pay the newer tax slab, the lower tax slab of 12.5%
Right.
without indexation, right? And I don't think so. Government is now going to enter into that real estate space any longer. So I again imagine and foresee a status quo out there.
Okay, so status quo on old tax regime, status quo on long-term, short-term capital gains, on mutual funds, status quo on indexation. Will there be some change in REITs again, some tax incentive to prop this entire real estate market by way of real estate investment trusts?
Totally needed, Karthik.
Okay.
I think REITs is something which has to gain more prominence, and commercial real estate is something which has to give more, which has to be given more fillip. Overall, real estate as a sector, I think, is at the crux and center of any economy. So my sense is the bigger questions still remain in REITs, that dividend should not be double taxed. Basically, if that could be solved for, it will create a lot of clarity. SEBI has already taken a lot of initiatives to democratize the ticket size for REITs. I think more and more REITs have to get listed. Some norms have to be simplified, which I don't think so are so much in the purview of finance ministry, but more so in the purview of SEBI as a
Right.
regulator.
Right.
But yes, I think dividend taxation and a few other points could be made simpler on the REITs front.
Okay, simpler dividend taxation on the REITs front. Another, when we're talking about markets and market-based investment, security transaction tax is also something, Mohit, that has been in debate for a very long time. And with the kind of crackdown that we are seeing from SEBI as well as the finance ministry on the entire FNO action when it comes to retail investors who lose money, do you think there is some case this time to tinker with the security transaction tax?
Karthik, I honestly wish it were reduced. It is just at the inflection point where it will break the back of quite a number of traders. Honestly, it's a fairly high STT which we in this country are paying on every trade. So my sense is, look, if you really want to drive volumes, and that should be the endeavor in anything and everything which a government does, it has to drive volumes. It has to try and spread the net far and wide so that more and more people are part of the tax net. You can't make it so steep that very few are able to pay it and very few can afford it, and then most of the people try to wriggle out of it, right? So my sense is STTs are already at a fairly high level, both in cash and futures market. Some easing would definitely help, but I honestly doubt the government will go the opposite way. I think again a status quo out here is what I'm expecting.
Okay, but with restrictions in the FNO trade for retail investors, in any case, I think the government's overall kitty of tax collection by way of security transaction tax would go down. So, I mean, is there possibly a case that the government may actually increase STT this time around to compensate for the reduced FNO action?
I doubt, honestly, Karthik, that the STTs will be increased. I will be fairly surprised if that is the case. Honestly, my sense is with the increased the transaction sizes, perhaps the value size increases a little, and it kind of compensates for the retail collection through the STT kind of thing. So I am not really sure as to how much impact it will have on the overall collection of government. Perhaps it could be a market impact, more to say, but my sense is I still continue to believe that it'll have a status quo kind of an impact.
Okay, so let's move on to another asset class, and this one is pretty much the favorite of all households, which is gold. So, when somebody wants to invest in gold and look at gold as purely an investment class, do you think the reduced custom duty will stay, or will they be tinkering with that?
Gold is a tricky case, Karthik. Look, honestly, I think it directly impacts gold and oil are two things which directly impacts your trade deficit and fiscal deficit per se. Government has been running a fairly high trade deficit for last 2, 3 odd months. And look, gold custom duties, governments time in and time again have tried playing around with it. It went to as high as 16%, was reduced dramatically last year. It has again increased gold imports. Now you can argue that it reduces the black market overall, the second market which goes on, parallel market which goes on, but a reduced customs duty is having a serious impact on our trade deficits. So I'm really not sure what the government finances look like out here, and would the FM want to again dabble with it? But I don't further foresee a reduction in trade duties or customs duties.
Okay.
It might just increase given the trade deficit.
Oh, might just increase given the trade deficit. Okay.
Possible, possible.
Possible. Sure. Mohit, another important investment class emerging in the world, especially in the US, comes by way of cryptocurrencies. We've seen the budget has stayed silent, conspicuously silent on recognizing this investment class, and one pays taxes on gains on crypto, but the losses are not offset. Now with the Bitcoin at a record high of $109,000 a piece as of yesterday, I haven't checked the rates this morning. Do you think there is some chance that there's going to be some clarification on cryptocurrencies, or do you think the government is not going to budge on its stand? And it is pretty much a gray area stand. It's not illegal, but it is not regulated. So will anything happen in cryptocurrencies?
I think honestly, Karthik, when you don't understand something or when you really don't want to get into a messy situation, it's best for everyone to just stay silent on particular topics. And I think that is what the government is trying to do out here. They're just keeping silent on this very important topic. My sense is world around, we will see a lot of people following the US what do you say, the way US solves for this, or the US formula per se. I think people are waiting as to what Trump will do in terms of crypto and how the US market will emerge, and perhaps then we will see some economies and some countries trying to follow suit. I don't think so in India government will be in a hurry or in a rush to kind of do anything around it. I think they'll just leave the topic as it is on the side. The any which was taxing it to the core. So there's no further scope of taxing it higher from the current levels. So my sense is government might just stay away from this topic.
All right. And there is also some discussion on fixed deposits and the taxation on fixed deposits. Mohit, theoretically, does it seem viable for the government to encourage more bank deposits and add more liquidity in banks? Do you think there is a case where the government should look at the proceeds from fixed deposits to be taxed like mutual funds, short-term, long-term, and not really get added back to the income?
Look, I think it was a long-lasting demand of bankers that deposits be brought, or the debt funds or fixed income taxation be brought at par with the deposit taxation. Now that's been done for last two budgets. So debt is completely taxed, as in fixed income mutual funds are completely taxed in the hands of investors at marginal rate, and so is fixed deposits. So it's at par now, and it is about on the merit of the asset class as to what finds more favor. And my sense is over last 2 years we have seen a lot of pull down from retail investors from fixed income investments. If you see the additional money going into fixed income investments is not so high, right? So my sense is the banking liquidity ease off. It's more in the purview of central bank now. I don't think so. Government is going to do anything favoring the fixed deposit taxation out here. I don't foresee that scenario.
All right, you don't foresee that scenario. And finally, the ninth point. We're News 9, so we like to do things in the number of nine. So finally, my ninth question to you, Mohit, is senior citizen savings scheme. Last year, we saw that the government had doubled the investment for senior citizens, and this particular scheme is something that a lot of senior citizens put their life savings into. Is there room to add more cushion for senior citizens by way of the senior citizen savings scheme?
Kartik, a very important trivia. The sum total of this year is also nine, so this might perhaps be the year of News 9, right? And
With you
and
around and on our show, Mohit, I'm pretty sure this will be the year of News 9, but do go
I
ahead.
wish you all the very best. And look, senior citizen savings scheme. I honestly wish and pray government does a lot more to make this attractive. Senior citizens need more concessions around the budget, and the best way to pass it is to make this tax free. Honestly, the interest income is I think around eight or something right now. And if they were to make that tax free, it will ease off a life of so many senior citizens around the country, and be a very very big boost to their life and their expenses and everything. So my humble request to the powers that may be is that senior citizen savings scheme be made, the interest earned from that be made completely tax free, and I think they'll go a long way.